Hey everyone, and welcome to EPSmomentum.com. Thank you for joining us. We're going to wait a few minutes for people to join. But first, I'd like to thank you all for all the feedback that you sent us on the your comments and on the platform and the emails that we're getting about our platform. It's really, really encouraging, and I hope it helps you all to pick stocks. So, in this, as I said in my last post on LinkedIn, this crazy markets where on one side we have some wars and crisis and inflation and so on, and on the other side we have a booming economy with AI and even some stocks making great progress in the energy sector booming and so on. So there's a lot of give or take, or it's a two-side market, which I think is a great place to stock pick. So stock picking is very important right now. And yeah, so this is what we are going to be doing right now. So having a look at a 360 on a stock. So I'll tell you in a second what I mean by 360. But first off, maybe we go into the platform. So EPSmomentum.com, you can go and get there and get a full view of the market and sign up for our service. So here we have a macro view, so we can obviously see a lot of red here, a lot of down indices, and not much is up except oil, maybe. So actually, if you click on oil, we can have a look at the damage. From 68 to 117. That's the USO, by the way. We can see a very strong volatility, so the trend is still very much higher. Very strongly volatile. So you get a lot of power there. But it's fairly negative right now. So the power days trend is negative. So that's interesting. From a sector standpoint, again, we got the energy sector right there. And the energy sector is really on the tear, of course. It just shows the trend is there. Volatility is getting lower here, but still in a very positive trend. And you can have a look at the rotation in between sectors. So here we are looking at all the sectors, and you can see since the beginning of March, XLE is clearly outperforming everyone. So that is impressive, I guess, but expected. We can also ratio it to SPY, which lets you see the rotation in a different angle, but still the XLE is outperforming everyone. Notice the XLK is the yellow one here is fighting. So we kind of in risk off mode, so we don't really know on which side we're on. It's kind of give or take depending on where the news is coming from. But let's go into stocks, and I want to show you the platform and what we do on stock. So first, what's important is having a 360 on a company. So what's a 360? So in my opinion, what you want is you want news from the company. That's one thing. What else do you want? Do you want the financials from the company? You want to make sure that the company is in good shape and it's progressing and it's growing and making more and more money. And this is very important. So that's one piece that's important. And then we'll go into the sell side, the buy side, the institutions, the volume, the flow, and the technical analysis, and see where we get see what kind of signal we get for a specific stock, and then we can go from there. So first off, when you're on the platform, there's a lot of things that are truly unique to EPS Momentum. One of them is the EM score, which is our earning momentum indicator. So it is not a technical indicator at all. It is really a fundamental indicator based on the income statement mostly. And what it does, it actually writes a number at any earning day and tell you about the momentum. Is the momentum going up or down or trending up? And that overlays with prices, so it makes it super useful. So let me pull up a widget here that is the earning analysis, and you'll understand what I'm talking about here. So this is the earning analysis widget. So on the side, I have all the important metrics from the income statement: earning per share, sales, profit margin, and free cash flow. So I'm going to go with earning per share. And what we're seeing here is a company that is making money, of course, but not only is making money. So we see 1.62 is the last number reported. The number before was 0.89, which means it's an 82% growth from the previous year and a 21% acceleration. So this is very important. And this is what we focus on at EPS Momentum, is not only the growth stocks, but also the acceleration. So on the acceleration part, this is what moves the needle. As I always said, a company that grows 20%, 3 quarters in a row is great, but it doesn't really accelerate or anything, right? So it will be penalized by Wall Street, right? So what you want is a company that does 15, 20, 35% in growth 3 quarters in a row. That's what you want to see. You want to see growth and acceleration. So that number here, 21.53, is the acceleration between the 2 quarters. That's what you want to see. You want to see acceleration, as well as momentum. So 0.52, 89, and 162, that's a true upward curve that pushes the price up, right? So that is a true linear momentum. That's what we want to see, plus acceleration. And then we switch to sales. And what we do see here is 22, 59, 68, very, very clear growth, 73%, pretty impressive, and acceleration as well. And 2 quarters in a row, 6% last quarter, 10% now, almost 11. That's what you want to see. Okay, so we carry on with this, and if we sum all this up, and we have profit margin as well that we look at, and free cash flow. Profit margin is pretty good, and the free cash flow, which could be erratic. So in this case, this quarter is kind of erratic, but the overall score of that company is 23.58, which is 20 rounded 24. So that's what we're getting, EM 24. So the EM is a score between -50 and +50, and this is what you get. You get a score on every quarter. You can hover your mouse and see how the earning per share and sales were on each of those quarters, and analyze them. So yeah, this is what you want to see. So I am going to look at history and see if we get some surprise there. So what I can see is that there is a time where the EM was negative. EM was -22, -26, -18, -12. So obviously this is not good, but getting better from 26, -18, -12, and then all of a sudden 22, 50, 19, 35, and the stock price double, triple, quadruple over the last few quarters. And this is what you want to capture. You want to capture the acceleration and the growth of that company. So how do we go about doing this? So first, you want to look at the EM, and you want to see the growth in EM, even the growth between -18 to -12. That is a sign. That is a sign that things are getting better for the company, even if it's negative. So that's important. So between quarter increase is very significant in terms of the company getting progressing better. So that's what you want to see. Then people would say, well, these are fundamentals, right? So fundamentals are always kind of backward looking and late. And you could argue that, well, why did we not capture NVIDIA at 15? We only saw it at 42, right? So those 2-3 quarters here that maybe we could have traded NVIDIA before. So let's see how we can improve this methodology here. So exactly, earnings and fundamentals are backward looking. So what we are adding here at EPS Momentum is we're adding estimates revisions. So I am going to take another widget here and have a look at the estimates revisions. And I am going to focus on this. Okay, so the estimates revisions here are all the revisions, all the estimates that we get from analysts that are listed in that table here. You can see at the bottom. And in that table, I can see the number today, the number 30 days ago, the number 7 days ago, and the number today or yesterday, right? And that for this quarter, next year, 8 quarters and forward, and we compute all of this and the change of that into one line. So you can see some negatives here, great positives here for next year, and also for the year after. even some revision for 2028. So this we compute and we put it into one single line here that you see heading higher, for you to understand things in simple terms. And even like any individual will have trouble understanding 17 different series of numbers that constantly change every day, right? So we compacted everything into one line, and that's what you want. One line, we are getting this, and we can see here that the earning momentum revision score is up 3.6% since the beginning of the quarter, NVIDIA's quarter, and it's up 7.42 over 90 days, right? So this is very good and very positive, and as you can see, it's high up there. Then I can switch to sales. I can have the same thing with sales, and this is a sales revision score, which is higher up as well. I can look at competitors as well, and I can see where they stack up and which one is positive in terms of earning per share and sales revision score. And so they're all positive. Of course, their prices are down because the market is not really favorable right now, but still, that's a very good sign. You also have all the analyst concerns that we get from the earning call that you can see here that are explained, and also the management explanation or response to it, whether they were optimistic or not. So that's pretty powerful, and you can get a ton of detail from this. So I'm gonna minimize that widget. I'm still getting it on the side here, and I am just going to add this data set, which is earning per share revision score and sales revision score. So this is what I add at the bottom. There you go. And as you can see, those are two lines really pointing upward, and this is what we want to see. So let's go back to our example here where we have earning momentum at negative earning momentum, minus 26, minus 18. And this is obviously not great. And it's at the bottom of the barrel here, really like in the gutter. NVIDIA is $12. Of course, adjusted for change, right? For splits, right? But it's $12 here. But then eventually, after a couple of quarters, it goes to 40. So how do we spot this? Well, look at this. Look at the earning revisions from analysts that we're getting. And these revisions start to really, first turn really negative, and then starts to have the first, I'll say, glimpse of positiveness or good signs of improvement right there at the bottom, right? So right there at the bottom, we can see analysts revising up their estimates progressively, and then more and more, maybe every day or every week, they kind of revise their estimate up. EM is minus 18 here, which is better than 26. We can see earning per share is minus 30 and minus 20, but it was minus 15 and minus 16. So one could say it's improving a little bit from an EPS standpoint. But the break is really this. The break is really when in this quarter here, we can see a major increase in estimates and analyst estimates. What does that mean? That means the sell side is turning positive on the name. So the sell side is turning positive on the name. Something's going on, right? That means they'll call all the hedge funds and asset managers and say, well, I think we're going to name that is going to move the needle here. And it does. So NVIDIA goes from 26 to 40. It's already doubling in one quarter. In fact, what we are going to do at this point, we're going to insert power days. So I'll talk a second about what our power days are. Power days are special days where you have prices and volume that move significantly, and they produce a mark that is truly out of the ordinary. And what we believe at EPS Momentum is that there's only a few days in a year. So if I were to display here, that's a full year of worth of stock prices for NVIDIA. And here, what we can see, there's only 20 or 30 of those little P's here, which are power days. So those are days where very significantly the price moves and the volatility, and the volume in a significant manner. So if volume moves by a few standard deviations compared to historical averages, that's significant. So we see big volume spikes here, big price moves, and really detected by power days. So here we have a major volume on that day. major price move. And if I click on the P here, I can see 13 standard deviations. So what we do is we take the price and volume standard deviations and add them up. And here we can see a truly abnormal day. What happened there? They produced earnings that really rocked the boat. Every analyst revised their estimate, doubled up, upward. The stock went from something 28 to 39, and this is what really moves the needle. So having knowing this, you're well prepared to get, okay, well, that looks like the beginning of a rally, or at least something, right? And sure enough, the stock rallies to about 50 and go to a quarter that's even better after that. So this is how you spot the move earlier than just looking at the fundamentals. So now we have two pieces. So first piece is the stock price, of course, but we also have all the fundamentals here, or at least the income statement, which we think is the most important. And then you have the analyst estimates here that you see at the bottom, and this is the sell side view on things. And this is very important. Now, one thing that we are going to add to this is the RMR, relative market rank. So relative market rank is sometimes called the relative strength. So it's taking all the stocks in our database and telling you whether NVIDIA is the best stocks in performance over 1 year, 6 months, 3 months, and 1 month. So actually, we even have it broken down into RMR 1 month to 1 year here. So click on apply. And here you can see all 4 curves here, the 1 year, 1 month, 3 months, 6 months, 1 year, all laid out in a clean way. So for example, this period where NVIDIA is the red line here, the 1 year, they're 96. So the highest of the group. So this is all ranked, right? So I mean, it's between the scale between 0 and 100. So if it's 97, NVIDIA is the best over the year. But look at the yellow line here, it's 24, so it's actually one of the worst for the month. So you take those 4 lines here and you just compact them and add them up into one relative market rank line that you see here. So I'm going to remove this widget at the bottom and just a sub chart and just keep the RMR here. So this view is very important because this view is all investors, retail, institutions, and this defines the allocation of money. I mean, I view it as an allocation of money. If you think about it, if you have, $1,000 to invest, do you choose NVIDIA? Do you choose another name? Do you split your money in between one and another, and so you choose to allocate your money to some stock versus another one. And investors, when you see NVIDIA at 100 here or 98, that's probably the best stocks around. And it does, and it shows because it rallies like a rocket here, and we can see best stock around. Some of the periods, it's 48 here, or even 26, probably one of the worst stocks to invest in at that point in time. Okay, so for example, right now it's 45, so maybe not a good time to, for investors. Majority of investors don't invest in NVIDIA right now, right? So that's how we view things. So this is the overall market view of what NVIDIA is about in terms of investing over several periods, 1 month, 3 months, 1 year. It's all contained in that line here. So that's very important. So again, that's the third view. After the fundamentals, the sell side view, this is what we're getting. We're getting the market view, really. Now, everyone will want to also have a look at the technicals. So timing momentum is our proprietary model that helps you with this. So timing momentum is a series of indicators that are all stacked up in a very colorful way, but a very simple way. Green, positive, red, negative, right? So can it be any more simpler than this? We have a little bit of yellow on the trend, which means oscillation, but otherwise it's either green or red. So what do we get here? So we get 5 objects. One is the trend, and the trend is the average true range compared to the moving average 20 days. So kind of similar to some Keltner bands, if you want. It tells you if it's in a bullish trend. So see that bullish trend clearly rallies. So that means the price is above its average true range over that period. Then it falls inside the average true range band and oscillate. Doesn't know between bull and bear. It's kind of flat for quite a long time. Then it goes bullish a little bit. Then it oscillates again. Then it goes bearish a little bit, and then oscillates again. It's been oscillating for quite a while here. So that's the trend analysis. The second one is the price momentum. So price momentum is the price acceleration, the rate of change. So it's sophisticated rate of change weights in a fairly short period, between 3 to 15 days. And then what that gives you is really, is there momentum in the price? And momentum can be up or down, but what is the actual momentum contained inside the price? What's the acceleration? Again, what we do differently is acceleration. Here we focus on the price acceleration, and this is what you want to see here as price acceleration. Third thing, relative market rank slope. So this is what we have on the top here, that white line. So what we calculate is the slope of that white line. Is that white line increasing, decreasing? We can see it's heading downward here, so the slope is negative, and therefore we have that red here. So again, this is taking that thing above and putting it nicely there. The power days, as I explained, you see that little P here, 2.26. That's a harbinger for a growth period or a bull market, and it does go up and head that way, and that's why we have the green here, then red, then green, then red, green, and so on. So depending on how the market is oscillating, of course, there's a lot of battle here. There's a lot of ups and downs and erratic behavior, but this is the nature of the market. There's a lot of fight. This name is been a leading stock, so a lot of people are involved in this. And then the last one is the EMA 2050, which serve as a safeguard in terms of bull and bear periods. So more long term, of course. So here, bullish period, bearish period, and then bullish and bearish, bullish, and so on. And now we're really in a really small bear phase. So now we have the technical view. So with price and trends and average true range and relative market rank and power days and EMAs. So it gives you that technical view that a lot of people try to grasp with many indicators. Here, very simply, we have it as a green or red indicator that's all summarized for you to save time. So that's all good, and we are going to move to our next step, which is the dark shorts. So the dark shorts is really, and I'm going to put the dark shorts here on the side as well. I'm going to focus some time on this. Maybe I'll X out of this one. Okay. So the dark short is the trades that are done outside of the exchange on dark pools by sell side companies. So those sell side companies are naked short and in front of the buy side. And the buy side or hedge funds and asset managers, they usually, when they want to do a big block, they don't go to the exchanges and just like rip the book with 100 million orders, 100 million order that just would impact the price too much. So they go to the banks and brokers and say, I want to buy 100 million of NVIDIA. And the banks and broker will have to find the securities and give it to them. When they're short, naked short, they have to actually mention it. So this is what we capture. We capture the short of the banks and brokers. That means that the buyers are longs. That means big asset managers and hedge funds are long the name, or are going or moving inside the name or investing in that name. So what do we see here on NVIDIA? We see, well, over the last year that it was very significant and very high up there, and all of a sudden it dropped, right? It dropped where? Let's put the price stacked up over this. So see how the institutions in green were in the name and investing in the name on a regular basis, and that pushed the stock higher up, and that's what we get that rally to 182. And then on that day, they left the stock in Trove, I guess, and it's been kind of flattish for a while in terms of institutional investment in the name, and the stock price didn't go anywhere. So so that's what it is. So really, really key metric to get. And I want to zoom in on that last part here and focus on that slope here. So the slope is fairly positive here, telling you that potentially, you see that slope over 20 days, it's kind of upward. And the last 10 days, it is upward, right? So it's slightly, the slope here is 0.15. So it's with the 10 days, so it's getting up, but the price is going down. So we have divergence. When we have something that is in sync, they move in tandem together, but here they're diverging. So that means something's going on, because when you have divergence, it's either the buy side going in and stop drops, which tells you, well, maybe you won't drop that much going further, or the opposite, where the stock rise and the institutions are leaving the name. That tells you also something. Then maybe that rise is starting to temper a little bit and will flatten, right? So this is dark short. So what you can do is you can just add it to the chart that you have here at the bottom, and I have the dark shorts. So I can see here the drop and the end of the rally. Basically, you can see it clearly from that day onwards, the end of the rally, right? And that is always not a great thing for stock, or to see institutional investors not investing properly in the name. Well, I mean, in size in the name. So you can go back in history, and what you can notice is, you remember when we talked about that minus 18 here and the institutions and so on? Look at that big jump here, right? That tells you that institution went in the name, bought the name at 16. So they knew something was going on almost at or even before analysts revised their estimates. Okay, so now you have the full picture. You have the 360 on the name, right? 360 on the name. Why? Because first I have stock prices. Great. Second, I have the fundamentals here. So the earning momentum. So earning and sales momentum, and I can see the fundamentals right on the chart with that number growing and shrinking and signaling a rally. Third, I can see important point of volume. So the market pressure of everyone, right? Fourth, I can see the overall market in terms of interest. Is that name in fashion right now with all investors, retail, institutions, everyone, right? Fifth, I can see the technicals. So very clearly the technicals, what would have been a good day here to buy the stocks? Well, wait for a period where all green, it's all green here and all green here. So you would start on that day and it would buy on that day, right, at 52. Now it's 169, right? You could have gone earlier here. You see all the greens here turning very positive right before earnings here. That would be another good day to get in, right? So you can see the technicals. Fifth, you can see the sell side. So the sell side estimates is here, telling you the revisions of estimates going higher up. And six, the dark shorts. So this is buy side interest, like in size, buy side institutions getting in the name or not. So in summary, you can see the sell side, the buy side, the overall markets, the technicals, the fundamentals, and obviously the price points and the volume on one visual, right? So this is what we do. This is why our platform is super powerful. All of those tools you can get in the screener, and I'll show you in the next video how we go and present this in the screener, and that will be super powerful for you to find great picks. But yeah, I mean that's it for today. I just wanted to give you an introduction of our system here and how we can do a 360 on a stock. And obviously I didn't go into news or any analysis, but you can use our AI analyst for that. And I can type NVIDIA and go into the last filings where you can get the AK on one side and the summary on the left. You can see a full investor report about what the company does, competition, growth and prospects, the risk and threats. And you can see all the earning calls, The latest earning call is here with the summary and also the various important point in that earning call, like the guidance compared to competitors, the risk and challenges, the product lines and market pressure, and all compared to other players. And you can see the strength and what's going on in each of their fields, and then the analyst concerns as well as news. So you can always get the news attached to this. But yeah, I mean, this is what I wanted to show you today, is really the overview on the stock on a 360, and then we can put all this in a screener, and for you to get started in stock picking and really focus on the best picks for your portfolio. All right, that's it for me. I hope it was useful, and thank you very much for your time.